Hello traders, this is Tim McCarthy and wanted to make this video today because I made one yesterday about this trade I was going to do with STLA. And after I thought about it for a while, it's just not sitting right with me because the strategy I really was looking at it's the buy right cover call with dividend strategy, but they're not paying a dividend. And they do pay a great dividend, which is why I like them, but they only pay it once a year and they just paid it just recently. So um, I just figured with this, the premium it's okay. 65 cents a share. That's pretty good. And this is still a good ROI, but I thought there might be something better. So, and I even thought about selling a put on them because that's not a bad thing to do. So let's go back in here. Let's go to Solantis, go to their options chain, and go at least 45 days out. And you can see here, this was the cover call I was going to sell on them. Um, last traded price was 68 cents per contract. And then even looking at the puts, 80 cents per contract for even that's just selling an in the money put. So basically, like if I did that, it's kind of like if I got assigned, it would be basically like I bought them at $16.20, which is good. Um, the same thing here where they're uh, subtract 68 cents from 17. So, it's not quite as good of a deal. And they're not paying a dividend. So, that just didn't sit right with me. So what I did was I went back to the high yield dividend stocks list, and this lists the top 100. But a little trick is if you click the download button, you're going to get all of them. And so that's what I did here. And I'm going to go ahead and put some parameters on here. So the typical parameter I like is algorithm is got to be greater than equal to 16. That'll whittle quite a bit down there. Has options. I don't need to put filter because all of these have options. And then we want to have, we want to make sure that it is paying a dividend. So I want to add a date filter on here. So I want that to be after tomorrow, so I can qualify for the dividend if my trade gets executed tomorrow on May 22nd. So that whittles the list down quite a bit. And then the next thing I want to do is, so I have a proprietary liquidity rating system, and I want to be able to get in and out of these trades. And if it's something has a low liquidity, that means like either you're not going to really get out of your trade, or you're going to accept a much lower premium or price on the stock. So I like going with higher liquidity stocks because I can get the the what I'm bidding on. I can get that order filled a lot easier. So I'm going to go ahead and say this has got to be greater than or equal to 3, which is pretty good. Okay, so now this really uh, filters a lot out, and so next thing I want to do is let's take a look. Well, I don't really need to do any more filtering here. Just looking at the dividend amount. EOG, that looks pretty good, but they're $112 a share. So then Comerica, I just did a trade on them, so I don't want to like have too much of that in my portfolio. So next thing I'm looking at is Jackson Financial, and I did a trade on them a couple weeks ago on one of my other accounts, and I know that they're down a little bit right now, but I still think they're a solid company. And their ex-dividend date looks really juicy to me because it's May 31st. That's coming up real quick, and they have a decent dividend amount with a yield of 8.48%. That's pretty darn good. So I like this one. And what I did was I went ahead and uh, put their numbers in the spreadsheet here. So their current share price is 30.20. And let's let's dive into them here. Let's just find them real quick here in the stock scorecard. I'll go JXN. There they are. And let's just take a look at some of their numbers. So $30.23. We'll start plugging in 30.23, 30 point. Actually, it is 30.20. The numbers are just a tiny bit out of date because I looked at the after hours on Yahoo Finance. So this would be do want to do 2 contracts, so I gotta get 200 shares purchasing tomorrow. So this is an interesting thing here. I'm gonna go in the money. Now let's take a look at that. Let's go. I go to their options chain. They got a $5 spread, and let's go to July 21st. So if I go to 35, I'm not really getting very much good premium there. I don't really like that too much. But if I go 30, I'm going to get pretty good premium. But basically, like I think I can probably get about $1.90 there. The last trade was on the 19th, which is on Friday. So I think I can get so that's pretty decent premium right there. So I'm going to plug that into the spreadsheet. Got that there. I plugged in the dividend. So their dividend is paying out May 31st at 62 cents a share. And let's see here. Expires July 21st. So this is looking a lot better. So that's almost a 14% max profit with annualize that out. It's about 85%. So that's looking a lot better. And this is what I like here too. The break-even share price is 25.78. And since this is liquid and it's got pretty good premium, if that happens to start, let's say it starts to go below that, and I could close the trade out, or I could start reducing my uh, cost average. So I could you know I could I could hold on to it and start selling another a cover every time I sell a cover call, I'm reducing my cost basis. So the breaking even is 25.78 now, but um, if I at the end of this contract or towards the end of it, I could, if the premium is still pretty good, I could uh, close that contract out, sell another one, and that's going to keep reducing my cost basis. But what I really like about this trade is I like the idea of being in the money a little bit here, and the fact that's got a dividend coming up real quick. Because what will probably happen is right before the ex-dividend date, people are going to want that, and they will. There's a good chance that um, this cover call will get called away or get assigned, which means somebody's exercising their call, and they're going to take the cover call that I sold to them. They're going to exercise it and take these shares away, and I'm cool with that because if that happens, that means I keep the full premium. I don't get the dividend received per share. So let's get rid of that. I still get 12%, but I think the annualized ROI would go up quite a bit because I don't have to wait till July 21st anymore. If that happens on May 30th, that's an 8-day trade. Um, I like that. That means my capital is freed up. I can take that profit I made, which would be $719, and turn right around and jump into another trade. So this is a pretty good situation right here. This is the essence of the buy right cover call with dividend strategy. You want to tempt the market makers or the market to say, hey, I'm in the money. There's next dividend date coming up, but you've already collected some pretty good premium. So you're really just pocketing that premium, and if your shares get called away, great, no problem. So that's kind of what I'm looking at here, and why I like this trade. And I hope this helps you. And hey, everybody have a great day and happy trading. Thank you so much.